We do get Nvidia earnings next week.
No, it's going to be very important.
And this tactical trade from Morgan Stanley on TSM today is part of it.
Yeah, and there's 4 different notes today saying don't worry about the quarter. So that I don't like that. We those who own it, like my Chapel Trust, we don't want any expectations, especially because Blackwell is just now shipping for some companies. That's the latest and greatest. And we do like David. There seemed a secret Atlanta warehouse for Musk, where he bought a lot of GPUs. I don't know if you're aware of the secret Atlanta. Got that one?
No, actually, I had not heard about that. I was only aware of Memphis and the 200,000 H100s and
the Atlanta data center.
Warehouse.
I'm reading Business Insider has sizable computing power.
Is that for
It's for X and XAI.
Is that for Tesla?
Nvidia's upcoming earnings report is highly anticipated, with its guidance expected to impact market sentiment significantly. Known for its dominance in AI chip manufacturing and strong leadership under CEO Jensen Huang, Nvidia is considered a monopoly in the tech space. Despite short-term market volatility due to options trading, the company's long-term potential remains robust. Concerns about data center spending and overcapacity have been dismissed, as Nvidia continues to drive innovation with advancements like the Blackwell chip and quantum cloud simulations in partnership with Google. Analysts emphasize that its strong order backlog and market-leading technology position it for sustained growth. Key questions remain. Can Nvidia maintain its dominance in AI chips through the decade? How will markets respond to its earnings and guidance?
You've written about Nvidia in the past. This is a week where Nvidia could either send the market to new highs or send it right down to the toilet. What say you on Nvidia? Do you still like the company? And how important is this one single earnings release from this company?
Well, it's important, but their guidance is even more important. And I'm on the record saying that you should hold Nvidia at the end of the decade because no one can compete with them and the regenerative AI chips. And then after the end of the decade, it might be more quantum computing leading the way. But I love Jensen. I love what he does. I think he's a great leader. Very few founders can actually run their company. And the only glitch I would say with Nvidia is the Citadels of the world write so many options on this stock. You got to realize if the stock gaps up, then Citadel has to pay out all this money versus just pocketing all the premiums they just collected. So sometimes the tail wags the dog when Nvidia announces. So if it doesn't go up a lot on day one, it'll go up in subsequent days.
You cover a lot of stocks, Louis. So for you to call Nvidia the stock of the decade, that certainly sticks out to me. You mean to tell me no one is close to Nvidia at all in anything it does? No,
there's Jensen gave a nice talk to Stanford Business School. My son was actually in the audience. That talk is on YouTube if somebody wants to see it. It's about 55 minutes. And they spent up to $2 billion per regenerative chips, and no one can compete with them on regenerative AI. So they have a monopoly. What's going to be happening by the end of the decade as they upgrade the Blackwell chip is you can only fit so many transistors on these chips, and they'll be approaching the atomic level. So obviously they can't go beyond that. And then the quantum computing is the only way you can speed things up after that. And they already have a quantum cloud simulator. They're working with Google on their quantum computing development. So that'll be the next phase.
Curious to get in your mind. So when you saw that DeepSeek news come out, hit the market, slammed Nvidia, I mean, are you just like, this is ridiculous? I mean, it's Nvidia. I mean, we need their chips.
Yeah. It looks like that was a plant by the Chinese Communist Party because obviously the week before, President Trump had announced Stargate with Larry Ellison, Sam Altman, and the SoftBank founder. And the gentleman that runs DeepSeek is a hedge fund manager and based in China, and they can't short over there. So if they want to short, they had to try to prick our bubble. But although DeepSeek was the #1 seller on the Apple Store, it's been crashing a lot. They got cybersecurity issues, and so they got to expand the cloud in China to accommodate them. But the whole narrative that the old chips are just as good as the new chips, and we wouldn't have to expand the data centers, that's proven to be a false narrative.
There was a report out today, I believe, from the team over at Cowen suggesting that Microsoft is cutting back on how much it's spending on data centers. Some of this spending by Microsoft, Meta, all the hyperscalers, and these are hundreds of billions of dollars. Any concern on your part that there is too much being spent and we will have overcapacity?
Not at all. Not at all. We have the data centers here in Reno. We have Amazon and Google, and the data centers have to go where the electricity is, and it has to be cheap electricity. Obviously, Microsoft wants zero carbon out of Pittsburgh. Most data centers are around hydroelectric or nuclear. Obviously, natural gas is going to be fueling a lot of the data centers moving forward now that President Trump is drill baby drill. So I think that they just have to figure out where they're going, because if you can't plug into power, it's not going to work.
Yeah, no, I mean, these chatbots, I mean, they got to plug in somewhere. I mean, they just suck energy, especially all these robots coming out now, right?
Correct. And everything's getting faster and faster, and they also need fast internet. So some place like Chattanooga's already got the fast internet, so does Kansas City. So there's a few things they need,
Hey, you've been in this game for quite a while. What would you compare, I guess, the market's, I want to call it obsession. Well, I will. Obsession with Nvidia. Is there another stock that you've covered over the years that has captured the zeitgeist in markets like Nvidia?
No, it's a monopoly. Everybody loves a monopoly. I think I've only had 5. My first one was Conair, which was hair dryers in the 80s. I guess everybody had a big hair, and that lasted for a few years.
I think they're selling those things for $2 in CVS now. Yeah,
that's right. Then we had Tyson Foods, which figured out a new way to eat chicken, because in the 60s there was no chicken chunks, even in the 70s, or chicken tenders. They supply McDonald's with McNuggets. So Tyson had a nice little.
Still unclear what those McNuggets are, Lewis. Keep going. Still unclear.
Exactly. Well, that's their chicken essence, I think. Then we had it was Hanson Natural, which had Monster Energy, renamed itself. I still remember I had the Red Bull guys in my office because I had a friend with an IndyCar team, and I remember drinking this stuff, and I said, well, this is horrible. And I didn't realize I was supposed to be in college putting booze in it. But anyway, obviously energy drinks were incredible, and Monster was a big winner for us. They had the monopoly in the Americas. Red Bull was Europe. And then this is our second time in Nvidia, but we've been in it now for over 5 years, and the second time around, and I have no intention of selling it.
What would make you sell it? And if I had this right, I mean, you've been in Nvidia in some capacity since May 2019. I mean, so you really kind of got in early on this freight train that is Nvidia. I mean, how do you know when there's just no more gains, or the gains are going to slow down?
Well, we score stocks. So when margins come under compression and earnings aren't growing faster than sales, that's a warning sign. But basically what it is margin expansion creates a lot of the earnings surprises. You want positive analyst revisions. The analysts are notorious for underestimating. And so while the stock is being institutionalized, you just want to ride it as long as you can. But I don't have any company with operating margins as fat as Nvidia. They're 70% operating margins. They're ridiculous.
I put this question, I write our Sunday morning brief newsletter at Yahoo Finance, and I put a chart. There's a chart in there. You can go back and check it out. Nvidia is one of the cheapest AI stocks, at least on a PE basis, trades at about 29 times forward earnings. I can't figure out why it's so cheap, but is it because, I guess to your point, analysts have not marked their estimates quick enough on this company?
Well, the bigger you get, the harder it is to get a high PE. The PEs eventually do go down as you get in the multi-trillion-dollar market cap. But the cheapest out there, of course, is Supermicro, which is the Nvidia cloud supplier. They make the best rack systems. Of course, they have to announce their financials on Tuesday. It's been one of the better performers this year. But it looks like that there's been a lot of short covering in that stock.
Some of the folks that I've talked to, Lewis, suggest that Nvidia, they're going to beat big when they report, or likely to be big, but they could offer a little bit of a disappointing first quarter outlook. Do you think that sends the market into a tailspin?
No, but the problem is the order backlog is big.
Nvidia's upcoming earnings are crucial, with its guidance expected to impact market sentiment significantly. The company's dominance in AI chip manufacturing, led by its Blackwell chips and quantum computing advancements, highlights its monopoly in the industry. Analysts view Nvidia as a long-term leader, backed by strong margins and innovative leadership under CEO Jensen Huang. Despite concerns about data center overcapacity and competition, Nvidia's technological edge keeps it ahead. While short-term volatility may arise, experts remain optimistic about its growth. The market now eagerly awaits Nvidia's earnings and guidance to gauge its future momentum. Can Nvidia sustain its dominance in AI chips with rising competition? What impact do you expect from Nvidia's earnings on the market?